Okay, we're going to start today by looking at the S&P 500. As you can see, the S&P is in a very strong uptrend. It's been going on for at least a year now. We are overbought, and we're starting to go down a little bit, but we're still in an overbought state. You can see that at least the major stocks in the S&P have been going up. But it's interesting. Um, let's look at the Dow Industrial and see what it's doing, because it's been going down for 9 straight days. Um, let's look at that. While that's pulling up, let's look at our talking points here. We have December, we had the whole month is green. We expect good returns in November, December, January. We have two major holidays coming up. We have Christmas and New Year's. And we also have Martin Luther King Jr. Day. And so that makes these this time right here pretty positive in the stock market. It's called from December to 25th to 30th. That's called a Santa rally, and there's usually probably 80% chance that its stock market goes up during that time. Okay, let's look at the Dow Industrial Average. You can see that it's like kind of opposite the S&P 500. Let's look at the S&P. It's been going up while the Dow has been going down. Um, it's really interesting, and it's oversold right now, the Dow Industrial Average. So let's look at some more of our talking points here. We have, um, okay, so we have basically an unchanged market from last week. All the tech stocks continue to rally, but the rest of the market isn't. We're actually market, losing momentum in the stock market. The number of stocks above the 50-day and the 100-day moving average is going down. It was 50%, now it's 42% for the 50-day moving average. And this means that lesser stocks are rallying. Right now, what's happening is all the big stocks, the big tech stocks are doing really good, and that's carrying the stock market. But there's something called breadth that's very bad. That means there's more losers than winners almost every day. So that's a sign of weakness in the market. Um, okay, so let's look at some more of our other talking points. Um, seems like a lot of stocks, a lot of sectors are getting hit based on the election. We see healthcare is really getting hit on the chin. If we look at our, um, hold on for a second. Okay, if we look at some of our major stochastic charts for the S&P, let's go down and look at gold. Let's see, healthcare. Look at this. Since the election, the healthcare index is going down in a major way. You can see we're oversold. So this sector is it's basically going down after the appointing of RFK Jr. for a health position in Trump's administration. And a lot of that might not happen. A lot of the bad news that's coming out might not happen, and it might, but that's just taking the sector down, and it's out of favor right now. Let's look at some more of our notes. Okay, so the S&P, you can see it's in a well-defined uptrend with the channels. There's a lot of support at the 150-day moving average for almost every chart we're seeing. Let's see. Okay, so you can see that that the 10-year is actually has been rallying. It's been going up in the past week or so. So that's what, but the stock market hasn't gone down. And that's interesting. It hasn't gone up a whole lot. It's been going sideways. But it's very interesting. Usually whenever the interest rates of the 10-year go up, the stock market goes down. So that's interesting. It didn't correlate like that to this week. You can see oil price of oil is up 5%, and that could be an indication that the global economy is improving in general. And the US dollar continues to go up. It's up another 1%. Um, and gold is unchanged. So if you look at the US dollar, you can see it's in an uptrend. And that is bad for multinationals. So I keep an eye on this dollar index. Trump wants the dollar index to go down. He wants a weak dollar. So let's see if his administration actually um, makes it go down. Okay, the fear greed index is greed right now. Um, and that means basically caution, where there's a lot of people buying right now. And usually, whenever people are greedy, we want to be a seller, not a buyer. All right, so same thing with this American Association of Individual Investor Survey. Majority of participants are bullish. And when people are bullish, the translation is take some profits off the table or don't buy. All right, and the VIX is continuing to stay low. It's up a little from last week, but it's still very low. You can see it's at multi-year lows. Um, Fear greed index is greed, so we're going to put this X in our emotional chart right here to greed and delusional. What are we delusional about? We're starting to get excited about a new um, technology called quantum computing. And there's a lot of new news this week that came out that made the quantum stocks go up. So that we're going to add a new paradigm, and that new paradigm is quantum computing. And we're going to talk a little bit about that later on today. Um, but there aren't any major issues that lead to a crash this week. Nothing that was resolved. There isn't really anything um, happening in that sense. But we do see a little bit of cracks in the AI stock bubble. Um, and I'll talk a little bit about that with a note from Dan Niles. Let's look at what he said. He said on a podcast Friday, Microsoft CEO said whether he was supply constrained, I am power constrained, yes. I am not chip supply constrained. So we're definitely constrained in 24. So basically what he's basically saying here is there's going to be a digestion phase for NVIDIA in that they're not going to sell as many chips. There isn't as much demand as there used to be. So Dan Niles thinks there's a change from one of the biggest market participants of NVIDIA. He thinks that there's less demand in the coming year, and that's going to make that stock go down. And so he thinks, now we like to look at what he says, at the beginning of the year. He thinks um, why he believes the market drivers will continue to expand beyond tech. So right now there's a movement away from tech into other um, better valued companies. So he said, don't fight the Fed, pause, buy the Fed after 12.8, cut maybe, not bad for the market. Okay, so he still thinks the market's going to do okay, but he doesn't think NVIDIA will. He'd rather get into other market participants. And he said positive seasonality throughout January, fear of missing out, easy money, and pro-growth fiscal policies should keep the party going. Now that kind of matches our model. He said basically here, positive seasonality throughout January. Everyone in the stock market knows of this little chart that we're showing here. Positive seasonality throughout January. As soon as February hits, this is one of the worst months of the year. So we know that's going to stock market's not going to do anything. It's probably going to be going down in February. So watch out for that. So now let's see what else he says. Google Willow quantum chip performed in less than 5 minutes what would have taken a traditional computer um, an extreme amount of time, like um, 10 to the 25th years, cutting the error rate exponentially as it scales. So the next goal is to be useful beyond classical computation. And he said here, Dan Niles, this someday can be as transformational as AI. So now what happened this week is we had this news and Google went up like 15%. And 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 let me see. So we had a lot of the quantum stocks go up also. So let me see what else we have here. Did he say? Okay. So he says over the past 75 years, there have been 16 times when S&P year to date through November is up 20. In those cases, December is positive, 70%, 75% of the time. So he's saying basically the same thing that we're mapping out here, that December is usually good. It's usually up over 1% whenever we've had 20% year to date. So all indications are we're going to have a good month this month. And so we're going to look at um, quantum, the idea of quantum computing. It's a it's really sketchy right now. There's no real use case for it, but there's a lot of I think Google, I think IBM and Alphabet are leading the way with their technologies for that. And I'll explain some of that later on. All right. So you can see, okay, we already talked about this. All right. Okay, you can see the first to worst. The actual, what's happening now is we're having the best performing sectors from last year are turning into the best performing for this year also. And the communication services and tech sectors were greatly helped this week by Google. They went up 15%. So you can see some of these utilities and healthcare, these are really dragging and they're still doing poor. The reason why these are going up the most this year and last year are they the highest growth rates. And we're following those. But the energy and healthcare have been crushed by the new Trump administration after all these policies could be coming out. So, and utilities too. So let's watch to see what happens. We're going to make it first the worst for next year too. So, and these are going to be the worst. Let's see if it, but financials continue to do well though, and they didn't do that well last year. All right. Um, let's look at some of the market movers for today, up and down. And hold on for a second. Okay, let's look at some of the market movers. We have a lot of AI companies and AI infrastructure build out related companies. We a lot of Broadcom, of course, they do VMware and they do a lot of chips and infrastructure for the AI build out. We have Tesla, of course, they're involved with AI. And Tesla's been on fire since the election because Tesla is um, Elon Musk did a favor to help elect Donald Trump, and there seems to be like a momentum trade for Tesla now, and it's beyond it's way overvalued, and it's just a momentum trade. So we have a lot of momentum trades in the market, but the market is losing momentum breadth. So that's kind of the dichotomy. But a lot of these are AI build out companies. Micron, they make memory for the AI computers. CrowdStrike, they provide antivirus cyber for the AI build out. You see, Lamb Weston, they do French fries. That's not artificial intelligence. Um, okay, so we have Alphabet, of course, doing good because of the quantum message they gave, and Monolithic Power's AI build out. Okay, NetApp also. Now, the ones doing the worst, we have um, a lot of insurance companies are out of favor right now. We have United Health, Humana, and CVS. There was news, we'll go over it later on, about possibility of Trump getting rid of middlemen. And that kind of makes insurers and the middlemen, who a lot of these insurers are middlemen. And if they get rid of the middlemen, they are not as profitable. So that is 5% is a lot. So you can see in our screener, a lot of insurance companies are turning into be bargains. So I don't know what's going to happen to that industry, but this is an example of something Trump says that totally affects stock. So it's going to be chaos for 4 years, just like that. And you got to be willing to figure out if something is affected, if the stock is affected by something Trump says. Okay, so let's look at that was the S&P. Let's look at the Nasdaq. Very similar situation. Um, yep, the same stocks actually. Let's look at the sector ETFs. First of all, let's look at price of oil. Price of oil is down a little bit. So we expect anything oil related to be down, which is, yeah, oil is down, energy is down. Um, Healthcare is down. Healthcare is down because of the fear of new administration making these drug stocks less profitable. Home construction. Let's look at the 10-year. 10-year is down just a little bit. It's like unchanged. So I wouldn't even call it, it's unchanged for today. But you can see this massive move in the 10-year. That is totally affecting the these sectors. So the ones that do the worst whenever interest rates rise are home builders. So this could be why the home builders is going down. And one's going up the most, semiconductor. Okay, there's a lot of euphoria around Broadcom and their earnings report, and of course Google and their quantum chip, and we'll talk about that later on. So, and the bank ETF is up maybe because of Trump's administration and deregulation promises. So that made sense of all that. Financials are up a little bit. Okay, so now let's look at some more talking points. All right. Um, Daniel's picks from the beginning of the year. Amazon up 53%, Meta up 76%. It went up a lot recently. And Texas Instrument didn't do so well, only 11%. XPI, small cap biotech stocks, only up 5%. And KWEB, the Chinese tech ETF stock, is only up 17%. So that's why it's important right now. We're looking at what Dan Niles is saying for next year. He says, okay, he thinks what market drivers will continue to expand to beyond tech. He thinks there's going to be a move from NVIDIA to other stocks in the stock market. So that's why that's a hint for us to start looking for other stocks other than the big tech stocks for um, our next year's purchases. He didn't give his next year's predictions yet, but we're going to follow that because he did really good this year. Um, okay, so let's look at the charts of interest. I picked out some stock. This is Berkshire Hathaway. You can see that it's oversold and it's an insurer. So it's down with all the insurance companies. Now, this is it's been an uptrend for a long time. Insurance is probably 30% to 50% of their business because they do a lot of insurance through um, Geico. They do reinsurance. They reinsure major um, for major damages like hurricane damages and stuff like that. So they're an insurer. If they go down in a major way because of the Trump administration, I would definitely start looking at this. It's oversold right now. You can see it's below 20 and it's at the bottom end of its trend line. I'm not sure how much Berkshire Hathaway, they didn't talk about auto insurers, recently. Trump didn't mention Geico, but it's coming down with all the other insurance companies. So this is one we're going to watch, see if it breaks through here. If it breaks through here, then we have a different trend. It doesn't go up anymore. But traditionally, if you're, um, they have a good portion of their businesses that are not insurance. So maybe the baby is thrown out with the bathwater with Berkshire Hathaway. I don't know. Tesla, you can see that it has been in an uptrend for since beginning of the year, but since um, the election, it took on a life of its own. It's actually up 15% in a week. Starting a new uptrend. It's just it's beyond it's the fair value of Tesla is like much lower than where it is right now. This is a momentum stock. It's not something that's reliable to hold buy and hold right now. Because the earnings estimates, it's overvalued, but there's momentum in the stock and it keeps going up every day. NVIDIA is quite the opposite. It is approaching the bottom of its trend line and it's oversold. And we have a major floor of support in the 150-day moving average, which is this green line right here. And you can see it's been holding that 150-day moving average for like a year and a half. So we're watching it, you know, maybe this is the bottom part of the how far it goes down. I don't think there's any catalyst in the future. Dan now thinks that there's less demand. Microsoft they don't need as many as they did this year, chips from them. So it could be that if NVIDIA breaks through this bottom part of this channel, then it starts going down to here and it starts a downtrend. We don't know, but we're still in an uptrend until further notice. We're going to watch that level right there, and we're oversold. Um, okay, so you can see that the defense ETF is is breaking out of its long-term channel. Maybe on the promise that the government's going to have less expenses, and the Department of Government Efficiency is going to um, reduce a lot of the unneeded defense spending. We don't know. So that's a bad sign that it broke out of this long-term channel. Another interesting chart is the healthcare ETF. We do have like a whole year of support around this channel here, but if we break this right here, we're going to continue this downtrend. And for the most part, it's not based on earnings. It's based on the expectations that the new administration is going to be make it hard for drug companies to make money. And the XLI, okay, that's you can see that it's oversold and it's at the bottom of its trend line. It's in a very similar situation as the healthcare ETF. All right, and the financial ETF is kind of oversold and at the bottom of its channel. We have XLU utilities has broken out of its uptrend and but it's oversold right now. So we have support at this 150-day moving average, which is the green line. We always want to look at that as a floor of support for any stock or index. And we see this is uranium. It's oversold and it's near its um, bottom of its trend line. All right, so um, last week we talked about Oakmark and Bell's large cap ETF. This guy that does the Oakmark, he buys and holds stocks for like 20 years. He doesn't care. He likes to have stocks with good fundamentals, and he buys and holds them for 10 years. And some of the stocks that actually went up this week, Alphabet, we were talking last week, Alphabet is a bargain. It has venture capital projects within a company. You only pay 13 times for search. It has Waymo. I didn't mention it, quantum computing. And as soon as that quantum computing capital projects, venture capital project came up with something very interesting, it's re-rating the stock. So that's an example of how this guy, he looks 10 years down the line, 20 years, and there's going to be a demand for banking services 20 years from now. He likes Charles Schwab. That went up like 35% since we talked about it like a month ago. So he likes banks a lot, and they're going to do well under the next administration. Yeah, that was a good follow-up from last week. There's an article that came out about Walmart. They were the company of the year according to Yahoo Finance. Um, so they had 4 quarters of record profits, as well as um, they're competing against Target and Amazon, and they think that their fundamentals and how they handled this environment was really good. So I thought it'd be good to go over their chart and their fundamentals just to see where we're at. You can see this is one of the more powerful stocks in the stock market right now. It's at the top of its range. It's in an uptrend and a very reliable uptrend. Um, it's overbought right now too. You can see based on the earnings estimates, it's only grown at 11%, but it's consistent 11, and there's a 1% dividend, so it's a 12% total return. The 4 PE is 34, so that's almost 3 times overvalued. Um, they're basically copying the business model of Amazon. They're getting into advertising and they're getting into um, selling goods over the internet, similar to Amazon. Um, so they're going to be doing good in bad and good times and economic times. So this is a very steady eddy, maybe grow at 3 to 5%, um, maybe 10% a year. But the thing is, they're really overvalued right now. You pay more for a car that starts in the morning. So this is a reliable 11% return. The best thing, if this stock drops 10 or 20% someday, and it gets to maybe a peg ratio closer to 2, then you might want to look at it. Right now, it's it's really it's pretty expensive. But if you buy and hold it for 10 years, it'll probably continue to grow 11% or so. You can see its market cap is pretty big. It's almost 750 billion. They don't have any debt, not that much debt, so it's not something to worry about. But their profit margin is not that great. This is very similar to how Amazon was for a while. Their profit margin is only 2%. We want like 13%. Um, and return on equity is 18%. That's really good. So they have razor thin margins. That means if they buy shirts for like $10, they might sell them for $12 and make $2 profit or something like that. That's what a profit margin of 2% will give you. But I'm interested in stock profit margins of 10. Um, NVIDIA has profit margins of like 70. So this isn't that exciting to me because it's overvalued and it's kind of a stodgy company. Here's a news story that came out this week. Alphabet jumped almost 15% this week after they tout a breakthrough in quantum computing. All the quantum computing stocks are basically jumping right now. But the reality is, right now, this is very similar to AI. It could transform computing. It's in its infancy right now. There is no use case for these computers yet. Um, so what Google says is they made progress in more better than anyone in doing this. And everyone's hoping that Google could be powering the next AI, the next big thing in computing, which that could make Google similar to NVIDIA in their position with AI. So we have all these smaller companies, IONQ, quantum computing, Rigetti computing. We have really small companies that are just jumping like 20, 30% a day. And but they don't have earnings. They're basically they don't have they're not profitable. So it's very risky right now. This is very similar to how AI was 5 years ago. They were just talking about it and there wasn't a real market yet. But so it's so what this means for us, we've been following Google for like 3 years now, and it means Google has um, a new aura around it. It's just not a company that's losing its market share in search. They have possibly the best quantum computing environment chip available today. But they say it's expected um, to be used for code breaking and other large scale simulations, maybe drug manufacturing. Um, but it's not going to be for a couple years or decades before it's going to be making money. So so we might have a run on all these stocks until this excitement fades. So, anyways, um, let's look at Google right now. You can see that Google has it's been in a super reliable uptrend all year long, and it's at the top of its range right now. So it's overbought the top of its range. It's not a good time to buy it, unless it might break out like Tesla does, and then it's kind of making a new um, upward trajectory from here. But right now, we're still in this uptrend. We're at the top, and it's overbought. So it's not a good time to buy that one. Here's a little story about insurance stocks. Um, Trump, as I mentioned, as soon as he was elected, this is a chaos for the next 4 years. He mentioned we're going to knock out the middlemen. Every one of the insurance companies took a major hit, especially the ones that do um, that are middlemen, like CVS, Cigna, and United Health Group. So we've already been saying the pharmacy business is being disrupted. There's people like Mark Cuban has Cost Plus that basically cuts out the middleman. We have Trump administration saying they're going to disrupt. It's not a reliable business model anymore. There's companies like Walgreens that has a lot of debt, and they might go out of business. Um, CVS, they have a lot of debt too. So this is an example, one of the first major examples of something Trump says that makes an industry go down. We haven't been in these stocks, but if we look at um, we look at some of our stock screens for this week, we see a lot of healthcare and insurers in this top 10, in the top list. So you can see we have Progressive. They're like half off right now. We have um, mm, United Therapeutics. We have, let's see what other ones. All right. We have, of course, Berkshire Hathaway going down too. So let's look at, okay. So basically, this is an example of a whole industry that's going down. We don't know the extent. We also have the problem with the CEO being shot from United Healthcare. So we have a lot of negative vibes for that industry, the insurance industry. They might lose profitability if there's laws passed. So it's not as reliable as it used to be as a business model. So that's why we're staying away from this. Okay, that was a good little lesson learned. Um, but one of these stocks in the stock screener from this week is KB Homes. We've been following the home builders for a while. Um, there's a couple big home builders in the top list here. But we'll look at this one because it's one of the biggest ones. Um, you can see the earnings trajectory isn't that far in advance. They only have 1 year from 24 to 25. There must be there must be very little coverage on the company. So that's kind of scary for me. So they're only scheduled to grow 6% in the next year. So the PE ratio is 8 and they're growing at 6. So the PEG ratio is 1.3. So they're 30% overvalued, but they're not growing fast. And so the interest rates are going down. That helps the sector, but there's a large unmet demand for housing. There's a very low inventory everywhere you go in America. So those are the good things, but the bad things, um, their margins aren't doing so well because they have higher expenses, such as wood costs and whatever it takes to build a house. So overall, it doesn't interest me a whole lot because it's the housing business doesn't grow very fast. It's like cars. Cars in general grow 5% a year, the automotive industry. So let's look at their fundamentals. Their market cap is 5 billion. Their 4 PE is 8, and the PEG ratio isn't even available. So that's a big red flag. Profit margin is 9%. That's decent. And the return on equity is 15. That's okay. And the cash, they have 1.71 billion. So it's 1.3 billion in debt out of market cap. So that's a lot. That's like 1/3 of their market cap in debt. So that's something to worry about. So I looked at CFRA and see what they said. They said there's a certain affordability headwind when it comes to buying a home. The right now there's currently elevated mortgage rates, and you see the labor trends make it hard for consumers to qualify for a mortgage. So basically, people are earning less money and they're not going to be able to qualify. So there's not going to be less, there are going to be less people that can afford a mortgage. So less people buy the houses. So there's a margin pressure, and that's stemming from some of their strategies. So it seems like at least CFRA thinks that the bigger housing companies would do better in this environment. So okay, I'm scratching this one. This one's not a good idea. Um, According to CFRA, they said the fair value calculation is 113, and they say it's undervalued by 43%. I don't see that number. I looked. I don't see it undervalued that much. But there's might be something we're not looking at here. But you can see that the earnings is pretty inconsistent. You can see it was 9, it's growing, growing. Then it's between 22 and 23 had the earnings went down 20%. So that's unreliable. I don't like that. I like revenue going up in a straight line. Is it? No. So the revenue didn't go up this year. Pretty unreliable. Okay. I'm not buying that one. Okay, here's another story. Broadcom mounts strongest 2-day rally since IPO. Leveraged ETF doubles in 2 sessions. Okay, so it had good earnings and it gave good guidance. So it jumped 25% that day and 11% today. So it's now a $1 trillion company. It's going to be talked about with the Mag 7 stocks. It's going to be a Mag 8 now. So it's put in the same um, group as these companies: Apple, Microsoft, Nvidia, Google, Amazon, Meta, Tesla. So we've been talking about this stock for a while. It's just been overvalued. I didn't see, you know, the AI part of this company that it's actually um, people are paying for now. So you can see the earnings estimates, they're growing around 27% this year. So this might not include the current estimates that came out 2 days ago or yesterday. But they're growing it, their 4P is 36. So their PEG ratio is 1.3. So it's a 30% overvalued. Um, so they do a lot of business with the AI infrastructure build out. They have VMware, which is software that runs the data centers. They also have chips that they build for Apple, the iPhone, and for data centers. So their data center revenue is growing a lot. So that's why that they're up. Let's look at their fundamentals. They're 1 trillion in market cap. 4P is 36, and their PEG ratio is 1.67. So does that match? Yeah, that's close to our 1.3 calculation. So profit margin is 10, that 11, that's good. And the return on equity is 13, that's good. Their cash is, you see, they have 30 billion in debt out of 1 trillion. That's not a big deal. And they pay a little dividend too, like a 1% dividend. So let's look at what Morningstar said. They said it's 10% overvalued. Um, so they say there's a little, Apple's actually in the process of making their own chips. So they might not be ordering as many of their modems. And that was one of the reasons it was down uh, this year. But people are looking beyond that. Let's look at what CFRA said. They think it, Broadcom will be a winner from the AI infrastructure boom. They have networking switching business and software from VMware. Over the next 3 years, we see semi sales driven by its custom silicon business. They can grow 3 to 4 times over this time. And AI sales um, are also going up. So, so this has all the buzzwords, for a stock that could continue to go up. And they're working with some of the biggest companies in the world, like Apple. Um, so they think VMware, The great thing about VMware is it's high margins. Whenever you're selling software as a service, you make more money with those kind of businesses. So um, that'll help them with margins. And subscriptions business model allows you to have more consistent earnings over time. All right, so that's good. We went over that. CFRA says their fair value is 90. That means they're overvalued by 59%. That's pretty scary. Um, hmm, but they still have a buy on the stock. So that's weird. Um, okay, so they think it's overvalued by 134%. I mean, 59%. Let's look at their earnings and see if they're going up in a straight line. Yeah, that looks pretty good. They're going up. Let's look at their PE ratio over time. Hmm, it's actually staying consistent over time, it seems. So it's not selling over or under its long-term average. And revenue goes up in a straight line. So that all marks things we could be interested in. Their stock was in a reliable uptrend for quite a while, but broke out of that this week. So let's watch this. We can add this to stock we're looking at on a weekly basis. And that's basically all I had to say for today. I hope you have a really good rest of your week, and I'll see you next time.